All right, everybody. So quickly, we'll go over the two markets, ES and crude. So the first thing to understand is that what is edge? Edge is directional bias. If you're trading directionally, your edge is directional bias. What is directional bias? It's trend. Your edge is is the trend. The trend is the edge. I know there's a lot of talk about this is an edge and that is an edge and this, that, blah. Let me make it very clear. You trade with the trend because you're trading with an edge. You have trading with an edge that is fundamentally sound. It is something that is not made up by someone doing, weird indicator calculation. This is from math. It's from statistics. It's in Microsoft Excel. Edge is trend. All right. So trend is directional bias, and that's your edge. But now, how to capitalize on it is to look first for rallies, right, on a higher time frame, and then execute the entry on a lower time frame pullback. So rallies on a higher time frame. When it pulls back, look at a lower time frame, look for pressure, buying pressure, and then just get in. That's how you do it. All right. Now I'll give an example and a real trade. All right. So over here you have hourly. It establishes trend. It establishes trend, and it establishes the rally. Okay. Now you can look for pullbacks. Why? Because trend is established, rally, and it's a higher time frame. Here it's 60 minutes, which should be the lowest higher time frame. Nothing lower than that. It should really be more like 3 hour or 4 hour, but you can use 1 hour for day trades. And now it's rallying. Now we're gonna look for pullbacks. Price goes down. As it goes down, it goes into the zone, the support zone, right? What is support? Support is where to find trades. What is the trend and rally? It is the direction to take the trade. Direction to take the trade is trend and rally. Support is where to find trades. What is support? It is either the test right here or near the pivot. So just this area right here. All right, so it goes down, and you have the biggest bar in 100 bars right there. Biggest bar in 100 bars telling you I'm not going any lower, I'm going to go higher, and it's in the zone. It's not just, a quick tap, it's in the zone, and it has some follow through, so that sets up the pullback, which little pullback here, and that sets up this move here, which was the trade. All right, so the idea here is find the rally on the higher time frame, look for a pullback at support. It's that straightforward. Okay, higher time frame rally into a support area, lower time frame bullishness, which will be expressed either as big bars or big change of behavior wave, aka sign of strength. And that's it. So that will tell you that I'm going higher. Right? Because they're defending the support area. As I explained, typically protected low is the origin of the rally, is the protected low, right? Origin of the rally is the protected low. Why? Because in the past, there was a lot of buying from there. Is there a lot of buying from there? Yes, there is. How do you know? Green bars. Do you see green bars? Yes, I do. How many of them are there? 1, 2, 3, 4, 5. Clearly, this is a place of prior demand that created a rally. That's the area to look for a support level. Where else? 1, 2, 3, probably this, not this that much, but this is the area of supply. 1, 2, 3, 4 red bars, and obviously when it went up there was selling pressure. So you just have to see what support and resistance levels, but with trend. So the reason why I wouldn't take the test here is why, even though there's heavy selling, the trend is in the favorable to the bulls. 1, 2, 3, 4. You see 1, 2, 3, 4, 5. So I'm not short. Anyway, so wanted to kind of explain this because, and the reason why I'm doing this, because a lot of folks, they make this mistake. What is the mistake? Only focusing on a lower time frame by itself, especially minute-based time frames, and making a directional decision or a trading decision based on minute-based time frames, which are a disaster. All right. So, for example, if I okay, let's say I wake 8:30 open, right? At 8:30, the market is here. Okay, the market is here, 8:30 open. On the open, bam, big down bar, right? So between 8:30 and 9, it does this big move. What are people sentiment? Bearish, 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 bearish. So 8:30 to 9, right here, they see it go down. Okay, this right here, if you're looking at one time frame, you're going to be bearish. But if you understand that this is just a pullback, then you will not be bearish because it's going into a support area within an uptrend on a higher time frame, which is where to find trades. Here, look at the bullishness that comes about. Biggest bar in 100 green bars with follow through green bars, sets it up, takes out the high, shorts a stop. All right. So that's, remember, as Wyckoff traders, you really got to know the trend. You got to know the trend, and the trend is the most important thing, and you always trade with the trend. I know it's easy to say, but it's hard to do because the key reason why it's hard to do is folks don't distinguish between higher time frame and lower time frame trends. When you're trading, for example, if you're trading during the day, you must know what the higher time frame trend is, and many times two higher time frame trends. Like, let's say you're executing on the 5-minute, you have to know the hourly and the daily. Why? Because I'll show you why. I don't know why that. What I do. Oh boy. All right, now you have to know two higher time frame trends, because the way trends work, the way markets work is you have trends within trends, what we call fractals or something like that, right? So you need to know, let's say you're trading the 5-minute. If you're trading the 5-minute, you're really trading the hourly trend, for example. So you want to know. You want to know whether your market is at a support area. Okay? But the other thing you want to know is, let's say this is the 60-minute. The other thing you want to know is whether this is a pullback within the daily. Okay, so this sets up 4 scenarios. I'll just use a very concrete example. Let's use a daily and then hourly. All right. You want to know if this is up, up, down, down, and whether this is up, so let's say you decide to trade the hourly trend. If you're trading the hourly trend, you have to see, oh, okay, this is in an uptrend, right? But the daily is in a downtrend. So this scenario of this uptrend is equal to the pullback, and this scenario would be this. Okay, so why is that important? Because eventually, if it gets here and at this area, you shouldn't look to buy the pullback anymore, because it's going to be at a key area right? So it tapped this level, and now there's no point in buying the pullback because this thing is gonna go down. So that trend alignment right, will fit in one of these four scenarios. Is the daily up? Yes. Is the hourly up? Then it would look like this. Let's say all of this would equal that. Right? So this whole uptrend is really equal to just at one hourly leg, hourly rally, right? So this scenario is a very strong scenario, right? And that would be this one. So it's in an uptrend, and this is also uptrending and all of that. The other one is that, yeah, this is uptrending, the hourly is uptrending, but it's just a pullback in a downtrend daily. So you need to know this. Why? Because when you're ready to buy the pullback, let's say I want to buy it. I was looking to buy it here, but you realize that this situation here is this. That's a problem. Back off. Why? Because this is why. Higher time frame support resistance levels are stronger than lower time frame trends. Okay? High time frame support resistance level is stronger than lower time frame trends, and they will win. High time frame trends will win, or generally they will win. All right, so you have to know which scenario it is. And as far as the 5-minute or any minute based charts, is nothing but an entry chart. You're not really trading the minute-based chart. You're trading the hourly, but using minute-based charts for entry. Again, you are trading hourly or higher, hourly, but you're using minute-based charts for entry. Why? Because lower time frame charts, minute charts, have no structure. No or little this unreliable, have unreliable structure. That's a fact. And I'll show you this. Look at this. Let's say this is what folks did. They look at this and see, oh, it's a breakdown, after 8:30. After 8:30 is right here. Oh, this is a breakdown. I'm going to short. What happened? Makes a lower low, makes a higher high. Stopped. Okay, maybe he's making a higher high. Oh, okay, I'll buy this. Breakout, you buy the breakout, what happened? Stopped. Oh, wait. Look, it's going down, rallying. I sell the pullback. Sell the pullback, what happened? Goes above here, stopped. Oh, maybe this is a rally. Well, I'll buy the pullback here somewhere in this big bar, or the test here. Okay, I buy, what happened? Stopped. This is the reality of lower time frames, and this is, in my opinion, number one reason why you have such a high loss rate, where I think it's like 90%, because 90% are trying to analyze because they're looking at lower time frames, not realizing that there is no structure on lower time frames. There is nothing reliable on lower time frames. And lower time frames are entry-based charts that are totally noisy. Their volume is unreliable. Their trend is unreliable. Their levels are unreliable. Why? They're 5-minute. They have no time. They have no time or very little time, making them unreliable. Anyway, I'm done. So you get the idea here. Market rallied, pull back to support, buyers come in, entry done. All right. So will I be shorting this now? Not until these lows. This low here. If this low is taken, if this low is break down. You know, this big bar. Let's say this thing just breaks with a big bar. Trend is now to the downside. If this low is broken, but you might say, well, you know, this low pierced this low. That's fine. This happened. This is a spring. This is a spring. Spring will test support, slightly penetrating it. That's what happened. Does that mean I changed my direction? No, I bought it. Right? But if there's a clear breakdown, which means expansion in price to go into a lower range of prices, then this is a trend break, and your trend becomes down on this time frame. That's what it seems like. On the daily, as the hourly turns, what are we going to be looking at this level right here? 4866 and 4937. Why? Simple. Support level. Done. What is support level? Support area is where you find trades. That's it. Right? Trend is if you go long or short. Support is where to find trades. What direction do you trade, long or short? Defined by trend. But where to find the trade is defined by support resistance. And what is the support resistance? It is typically it's either the creek on ice or the low and high bar around here. So over here it's going to be this is the low bar right here. What is that? That's near the origin of the rally. Right? The origin of the rally is this. So in this area. And look, this is exactly where it went before. You see? Rally, pull back right into that area, into the low bar where it reacted from. Now we'll see it come back to that area. All right? So remember the three scenarios. There's actually 4 scenarios for pullbacks. One is it tests the ice or creek, which is test of the breakout or breakdown. Typically, it does that when there's a good amount of follow through. 2 is test of the high and low bar. It does that typically when there's not a lot of follow through. It has a tendency to test those high or low bars. Some folks call that the demand and supply zones, like the last red bar, the first green bar. The third scenario is that it will just spring or upthrust. It typically looks like an ABC correction after the rally, where C will spring A, right? And fourth, it has a tendency to come back down and go to a POC area. And that volume-based support, people will come in and add more or cover their losing trades, and that will create the pressure to go higher. So those are typically the 4 scenarios for pullbacks. And you just have to know that in advance, but you won't be able to see shit if you don't understand the trend and the impulse. You have to clearly see the rally impulses, the trend with the rally impulses, so you can get prepared for the pullback and look for the trade. All right, I'm done. Have a good weekend. Thank you. Bye-bye.